Is Scotiabank really the best bank for a mortgage? Well, the truth is every lender has unique features that might make them perfect or totally wrong for your situation. In this video, I'm going to break down what makes Scotiabank different. Now, I'm going to show you the unique tools they offer. I'm going to help you decide if those benefits actually line up with your goals. Hey guys, I'm Jarrett White, a Canadian mortgage broker here in British Columbia. I was ranked in the top percentage of mortgage brokers all across Canada, and I've helped hundreds of families make smarter mortgage decisions. Now, my job is to cut through the noise and help you figure out which bank works best for you. Now, before we dive into Scotiabank specifically, let's also clear up some things. Almost every single bank in Canada offers the basics. Now, rates go up and down, and they're different everywhere. Tomorrow's rates could make this video completely obsolete, so we're not going to dwell on that. In terms of term length, nearly all lenders have 1 to 5 year fixed rate terms and 5-year variables, with some having a 3-year variable option as well. Now, prepayment privileges are usually the same too. 10% lump sums per year is standard, with 15% increase in your payments is allowed, and they usually can be stacked. And when it comes to penalties, variable rate mortgages charge a 3-month interest penalty to break it, while a fixed rate mortgage has either a 3-month interest penalty or what's called an IRD. And believe me, the IRD is usually much higher. All right, so now that we've covered some of the common grounds and similarities between lenders, let's get into what actually makes Scotiabank different. First up is the STEP, the Scotiabank Total Equity Plan. This is the crown jewel, and if you've ever had a conventional mortgage with Scotia, this is probably what you would have. It means you have no mortgage default insurance, and essentially you're going to have a home equity line of credit automatically built into your mortgage. Every dollar you use towards paying down your mortgage becomes available to borrow again. That's your STEP. Now, the interest rate is prime plus 0.5%, which is still way cheaper than any credit cards or unsecured line of credits. The best part is it doesn't cost you anything to have it. You only pay interest when you use it. It's an amazing tool if you want flexibility or even just to invest. Now, next is Scotiabank's variable rate mortgage, which is different from every other major bank in Canada. Scotiabank's variable rate is what's called an adjustable rate mortgage. This means that if interest rates go up, your payment actually goes up with it. Now, if interest rates go down, your payment goes down with it as well. Every other major bank in Canada has a static payment variable, meaning your monthly payment stays the same no matter what. Rates could go up, they could go down, your payment stays the same. The only thing that changes is the amount of interest going towards principal or interest. Therefore, it's just an interest savings or an interest loss. This is a huge advantage because it actually gives you immediate relief if rates are going down. And right now in 2025 or end of 2025, they have been coming down. Another big difference is portability. Most lenders let you move your mortgage to a new property without paying a penalty if you're in a fixed rate term, whereas Scotiabank stands out here because they let you port both a variable and a fixed rate. That means you can move your mortgage to the new home without paying thousands of dollars in a penalty, no matter which product you're in. That flexibility is huge if there's even a chance you might move before the end of your term. Scotiabank also goes beyond the standard prepayment privileges. While many lenders cap you at 10, or some even go as high as 15% of lump sums per year allowed, Scotiabank offers some clients the ability to prepay up to 20%. Now, you might be thinking, why would I ever need to pay that much? That's a lot of money. But here's the trick. If you ever need to break your mortgage, you can use your STEP that we talked about earlier to borrow that full 20%, prepay your mortgage, and then that way your penalty is going to be on a much lower amount. You're saving 1/5 of the penalty, and on a penalty that's $25,000, that's still $5,000 of savings. On top of that, you can double your monthly payments to pay off your mortgage faster. It's a feature that gives you control, but you can actually seriously save some money if used strategically. Lastly, Scotiabank allows you to set up separate segments within your mortgage. This means that if you're porting or if you need to borrow additional funds, you don't actually have to break your mortgage. What you can do is you can actually just borrow those additional funds as a separate mortgage altogether, almost like a second mortgage, but you're still getting first mortgage rates. And it can save you from losing that really low rate that you might already have, and therefore you're just borrowing the extra amount at the current rates. So is Scotiabank the best bank to get a mortgage? Well, it honestly depends on what you value most. If flexibility, access to equity, adjustable payments, and creative structuring matters to you, Scotiabank is damn near the top of the list. But if your priorities are different, another lender may fit you better. That's where I come in. As a mortgage broker, I give complete unbiased advice, and I work with Scotiabank, but also dozens of other lenders to help you make the best decision possible with your mortgage. If you're buying, refinancing, or simply just renewing your mortgage, you can book a call with me using the link in the description, and that way we can talk about all the different types of mortgages that are available and make sure you're getting into a mortgage that actually suits your needs. Now, if this breakdown helped, I'd really appreciate it if you hit that subscribe button, like the video, and ring the bell to be notified when there's more. I'm going to be posting many more Canadian mortgage insights on here, and check out some of my upcoming videos where I'll be reviewing other lenders and going over their specific features, and that way you can make the best decision on which one might fit you best. Thanks for watching. Catch you on the next one.